And we're live.
All right.
Okay, and welcome to Behind the Markets. For those of us who are joining us on Facebook, I'm your host. On social media, I'm your host, Munyumba Mutwale, on our online audience. Syncing in with our in studio team right there, Mr. Vernon Chifite. How are you doing, my brother?
Fantastic. How are you, Tony, today?
We are good. We are good and ready to get started for the midweek session where we break down markets and we get into what the outlooks for the week are. I think today we shall be covering just a few main topics. We'll be talking about carbon credits. There was a talk of carbon credits at the mining endeavor that where the Saudis are dropping a lot more cash. They're on a shopping spree, I'll tell you that. Floods. We'll talk about floods and food and inflation. We'll also be talking about Puma Energy's investment in LPG. We mentioned this the last time, but I'm going to give you my analysis on it, which is some data that's been put aside on it. And we're going to be talking about wealth by age. We're back to our planning, our investment planning session. So we're going to be talking about the wealth matrix by age. So to everyone, thank you very much for joining us today. And it's time to get kicked off and time to get started. Now, taking a look at, just to kick off, taking a look at some of the data that's actually been switched on today, we still are seeing the Kwacha down its slide. We are now, Vernon, on day 87 of the loss of value of our currency. Obviously on an 87-day losing streak of the loss of value of our currency, 0.25% down, closing the day yesterday at 19.2395. That was the final Kwacha rate on the interbank rate, down 6.23%, 6.31%, sorry, and down 4.92% on the month and 6.31% year to date. So the Kwacha is still pushing itself on a 52-week low and showing signs that it's a continuous selling streak. Simultaneously, we saw yesterday that the Rand closed as well at closed at 1.0914, negative 0.99, 0.09% down. And as you see yesterday, you did see that year to date, the Rand is up 2.19% as a currency. Now, it's on a 3-day losing streak against the Kwacha, which is good for inflation expectations, but still, it's quite elevated and strong and closer to its 52-week high. So that was yesterday in terms of that market. Now, looking at the bond market, we are seeing that bonds yesterday did close 0.06% up in the secondary trading index. But on the US dollar index, they're down 0.26%. That takes them year to date at 3.42%. Still probably not enough to fend off what are the risks of inflation coming. But we're also looking at the GRZ bond index, which is down 2.79% for the offshore Zambian investor. We are seeing obviously that interest rates are still staying around 23.58%. That's been the holding point and the holding pattern they've been on. So we do have a strong domestic bond market on the secondary market showing signs of growth. But unfortunately, the US dollar performance is harming what we're seeing in terms of the offshore Zambian investor. For the copper market, we're seeing 0.35% up on copper on bets of China's recovery, but we are bouncing up and down in terms of copper prices. Remember, we're still at 8,925, which is pretty much where we were by the beginning of the year, somewhere around the 10th of January. We were around this area, 10th to the 13th of January. That's where we were, around this area. So therefore, copper prices still sitting at about around where they were a month ago. So all the highs that we did when we got copper up to 9,200 have now, or 9,300 have now shaved off back down on probably expectations that the Federal Reserve will continue to hike interest rates. Chairman Powell yesterday did say that he has acknowledged disinflation has actually taking place. In other words, U.S. inflation rates are starting to come down. Unfortunately, that also comes down to the fact that the copper price, that He's still saying we're still going to be fighting inflation. In fact, yesterday you saw the Reserve Bank of India raise interest rates by 25 basis points in a pledge to continue fighting inflation. So you are seeing that the global economy is not taking inflation as a joke, and they're continuing to push hard against it. When you saw oil yesterday, it was up 3% as people await reserve indications. Oil is up 3%, therefore pushing our expectations of the pump price up to 1% hike as of the end of this month. These are just early indications. Well, obviously, this is subject to change, and oil is a very volatile market, and also due to the FX rate. And there will be an MPC meeting. There will be an MPR announcement. So there'll be an MPC meeting this month. So that'll probably affect how exchange rates play. We're also taking a look at the position of gold, which is at 1,871 in US dollars and at 36,010 kwacha in kwacha. So we saw gold down 0.16% and down 0.41%. And gold is steadying. Obviously, as we're also still awaiting results and expecting, is there going to be a recession? Is the Federal Reserve still going to play its hand strong? But gold is still up 8.96% year to date in kwacha. So it's one of the strongest. And for the digital crypto traders who are involved in what we call the crypto craze, we are seeing that Bitcoin in kwacha is still up 48.85%, up 1.3% yesterday, and 48.85% year to date, with Ethereum up 48.37% year to date with 1.95%. There is still positive views, especially with Chairman Powell saying the words disinflation and acknowledging disinflation. That has allowed a lot of risk-on sentiment to play into the market. Let's take a look. Let's take a look, Vernon, at yesterday's economic calendar when we saw data released from yesterday. Main data that we saw coming out yesterday was Japanese confidence. Japanese leading indicators showing that the economy is still set in a slow growth fashion. We did see South African reserves pick up from 60 billion to 61 billion. That's a sign, obviously, that the South African economy, or South African rand, should start picking up some strength. The Halifax Housing Price Index in the UK showed 0% growth. That's going to affect our copper output. We're not seeing housing prices shoot up, but year on year, we saw 1.9% growth in terms of housing prices, where there was the expectation that housing prices were going to collapse in the UK. So it appears the UK housing market is starting to recover. We've seen it with construction. That's good. Industrial production in Germany fell by 3.1% month on month. That's poor signals for industrial demand. Again, that'll kind of give a seesaw effect to things like copper. Chinese reserves grew from 3.12 trillion to 3.18 trillion. That's a $60 billion growth in Chinese reserves, making their currency a lot more stronger and letting their economic situation be a lot more stronger. Remember that we import second from China. A stronger yuan affects our ability to actually get in cheaper electronics and non-food imports coming out of China. We're also picking up on data that came in terms of exports and imports from the U.S. Trade balance in the U.S. grew. The trade deficit, in America grew, meaning that America is still importing more than it's exporting, while you're seeing the trade deficit in Canada shrink. But that's mainly due to the fact that oil is supporting their trade deficit reduction. Now, mainly the news that came out yesterday was API crude data. This is what shot oil up by 3%. Oil came up because there are 3 million barrels in deficit, so 2.1 million barrels in deficit in the U.S. crude. So that actually affected things. While we saw the interest rate decision from the Bank of India to move interest rates from 6.5 to 6.25 to 6.5%. Now, what data should we be looking out for today before we get into some of the major topics that are handling us? Main news we should be looking at today is retail sales will show us economic growth data coming out of Italy. We're still waiting on PMIs domestically for Zambia. That's going to come out soon. We're looking at business confidence data coming out of South Africa that will affect production and imports that are coming in. Remember that the more confident the business environment is in South Africa, the more productive they become. The more productive they become, the cheaper the products that we import from them become. So that's a very important factor to take a look at. We always want to look at the productivity of South African factories. We're looking at mortgage data coming out of America, which affects interest rates, while we'll also be looking at crude data again, crude oil data, and Chairman Powell will be talking. Now, we're also looking at the end of today, we'll also be looking at a 10-year auction, which is 3.57% in America. It's very important to look at that number because it does affect what we'll be looking at in terms of interest rates around the world. That 10 years a doozy. It really controls a lot of the interest rates, while money supply data will be coming out of Japan. Four horsemen are telling you, Vernon, inflation is slowing down, except in areas like India. Interest rates are starting to curtail, or they're holding flat, while industrial demand is picking up in some housing areas, except for areas like Germany. And you're looking at international growth, which is still struggling to come out the block. So growth is still a problem around the world, and geosynchronous growth is going to be a question for quite a period of time. So that is my outlook, Vernon, in terms of what the Four Horsemen are saying. We're not going to be importing inflation as much. Interest rates are slowing down. It is our personal problems as a country which are giving us higher interest rates in terms of our debt profile, which is actually creating that problem. So, Vernon, let's get down into some of the major stories, some of the major news that came out yesterday. We got an announcement yesterday from the Mining Indaba that our friends from the East, and I'm not talking about Japan, I'm talking about the Middle East, have decided that they would like to try and invest very strongly in our carbon credits market. Now, I take this with a grain of salt, not because of distrust for the administration or anything. I take this with a grain of salt because we've been talking this carbon credit song for a while now. I think when I first started work in Zambia, which is back in 2011, we had been singing this song about getting the carbon credits market and getting it started and this and that, yada, yada, yada. Maybe timing has improved. Maybe things have gotten better. But unfortunately, I kind of take this with a grain of salt. But it appears that our friends from the Middle East would like to put in a little bit of money into it. They did pay the president a courtesy call to try and help support it and also help climate efforts. What we are acknowledging, what I am starting to acknowledge from the Saudis and the Arab Emirates, is that they are trying to make sure they diversify away from oil. Sorry about that. They are trying to diversify away from oil. Now, it is because they cannot keep living exactly by oil. And that's, I think, is the biggest question that they're trying to get away from. They cannot live exactly by oil because the world is moving to electric vehicles. EVs are growing at a rate of almost 60% annually, and that is a danger for them. So what they're trying to do is now start to do investments abroad. I am seeing from the Saudis what we saw from China in the 90s. And the 90s to 2000s, when China came into Africa and did heavy infrastructural investments, it appears the Saudis are going to do a lot of diversification investments into Africa. Them going to the Mining Indaba in Africa, them also now pitching to us, and them also holding COP20, the COP28, whatever 20 something it is. It's COP something, and they're always going to be making proclamations at it. But the point I want to try and drive at here is that the Saudis are taking an aggressive stance in externalizing their portfolio and doing something called an external posture of strength. So they will be pouncing around a lot. And it appears Zambia is going to be one of their destinations. So we just got to make sure. But they're coming in strong with equity. They're not really coming in for debt as much as our friends from the Far East were. They were coming in a lot with debt. These ones are coming in a lot with equity. They're coming in to take positions. Though I heard people talking about land being availed, we need to question some of those statements. But yes, because I'm not going to start forking over land from our country to people for the purpose of we need to slow down on this behavior, just throwing out land to people. But they are here to try and do some investments in our country. And it appears that we're going to try and diversify our investment portfolio from just the West versus the East to now the West, Middle East, and the East, the Far East, which is where we're going to be holding our portfolio. Now, we got to make sure that our people are active in the economy while all of this is happening, because there was an already established carbon credits push in Zambia. I don't know why we have sidelined those people who in 2010 actually did start a carbon credits exchange, and they did want to try and get the carbon credits exchange moving. But unfortunately, due to a lot of malfeasance in our market, there was poor ethics towards them, and it just never took off. So I'm curious to understand why we haven't maybe gotten those who are interested in investing to meet up with those who wanted to start the carbon credits market back then to now just partner together. Since, Vernon, we are singing the song about partnering with Zambians. Since we are talking about Zambians must play a critical role, why don't we get the Saudis to invest in those who had already started the idea, who had already done the research, who had done the registration, who had done a lot of the hard work, revive that idea, and now bring it back together so that the Zambians are participating in that. Now, what is a carbon credits exchange? A lot of people will ask that question because we're already struggling with stock exchange. What is it? Carbon credits exchanges basically work like this. Every company is given a certain allotment of carbon, okay, that they can emit, whether it's a mining company, whether it's a factory, whatever company you are given a certain allotment of carbon that you can emit into the air annually. Now, if you underutilize your carbon, if you are energy efficient, you can actually sell your carbon rights to another party who maybe has got excess pollution, be it a mine, be it anyone else. So therefore, it gives a lot of incentive for people to make their businesses energy efficient, and therefore the trading of carbon rights can start to play out. Now, that is a framework that can help with people now saying, look, okay, if I want to make sure that I make a little bit of extra money as a business, maybe I put solar panels on there, reduce, and maybe then I can start to sell. Or maybe as business, I can avoid my waste, or I can avoid anything that emits carbon. So this is really at the industrial sector of Zambia, but it becomes an investment towards it. So that's the conversation had there. Second point, Vernon, I wanted to really talk about today, before we get into a deep dive analysis, is floods and food. Now, my biggest concern, as we're busy offloading maize or milli meal to try and help curb inflation, as FRA is trying to intervene, every day, Vernon, every single day, you switch on the news. In fact, Vernon, when's the last time you switched on the news and didn't hear a flood, except Kariba? When's the last time you didn't hear a flood in this country, that somewhere there's a flood happening?
Mm-hmm.
Okay, so you're a little bit behind it. So,
Well, I think I have. I think in we have heard of that as well. Apart from just His Excellency, reports that he actually visited some sites and whatnot. It's with Lingalinga today. Today we're in Kanyama. There are floods and whatnot. It's like a constant problem that we always have every now and then. It's like it never really ends. It's always there.
But it's not just, and the thing is, it's not just the floods in areas like you mentioned, Kalingalinga, Kanyama. It's not just those floods. What I mean is that even in the rural areas where food is being grown, there's continuous flooding. So my concern is this not affecting crop output? Okay, because if floods are happening, then my fear is food output is going to be a problem. And the second thing my concern also is that if we're offloading maize now to support milling to reduce the prices now, in the face of potential lower output of crop, in a time where, Vernon, I'm going to add onto this, in a time where we are having a lot of demand for our agricultural export. Remember that a lot of the world is struggling with food shortages. So Zambian food, yes, with neighbors who are struggling to grow food, be it DRC, Angola, all these areas who need your food, okay? So all these things that are going to come together is going to create a huge demand, and we're going to have a short supply. And this is why I fear we may have food inflation that may be a little bit stronger than we suspect this year. We may find food inflation actually being quite strong even in the winter years. So where we usually have the inflation valley. So that's a little bit of an expectation, but I'll be waiting for the announcement of our crop output. But I'm sure these floods have affected the crop output negatively, because I doubt we've got flood-resistant maize in this country. And we don't have that much sitting in reserve in FRA that we can dole it out now and then still have some to dole out next year. So I think that's my biggest concern going forward when it comes to this. So that is part of it as well. And obviously that's why I'm looking at my inflation outlook a little bit. One, that I'm seeing the central bank trying to curb the exchange rate because that's causing energy inflation. But I'm seeing the floods potentially causing food inflation. And we might be in a bit of what I call a squeeze point. We might be getting squeezed upwards in terms of inflation by both floods and the FX rate. These are the two biggest risks to me. These are the two biggest inflation risks that I'm seeing on the horizon, and it'll depend on one, what is the figure we're going to get for crop output in March, April, and two, what is the central bank going to do? They have enacted a reserve ratio squeeze a little bit, which is going to take place probably on the 13th of February, but we're not seeing anyone reacting to that yet. And we'll probably see them now have to go into an aggressive interest rate hike if this persists, while we're trying to fend off whatever the impacts of food shortages may be. Because this is not just washing away maize, because it's not just Lusaka where it is. It's Lusaka because we like to make noise about ourselves, but it's all over this country where there are floods. In fact, one news report even said there have been floods in 7 of the provinces of this country. 7, okay, including the one where Kariba is. But I'm gonna keep jabbing at that point, because it's silly for people to keep trying to make me think that, oh no, it floods different. Oh, please, I'm not a child. But anyway, let's get into my deep dive analysis for today. I've been trying to get some of these done and being a bit more aggressive about doing a few deep dive analysis for you. Last week, Vernon, we got an announcement that Puma Energy was going to do a purchase of OGAZ's LPG plant. So now the question is that always gets asked to me is this a good move? Does it make it a buy? What does the data say? Now, we try and avoid giving you speculation and hearsay. We try and read data for you. Okay, data is a very important thing for you so that you have to make better decisions. So in that spirit, Vernon, I have compiled some data to help the situation for people. So one of Puma Energy's biggest customers in the economy is the auto sector. Okay, so vehicles putting gas in their car, retail clients, and I can just forward this a little bit just so that people can see towards the end. Retail clients over the last years have made up 49% of Puma's revenue. So this is the breakdown of Puma Energy's revenue from 2015 to 2019. We took out the pandemic years because those were anomalies. People were not moving around because they were on lockdown. Business was down. Things got tough. Supply chains were locked down. But as you can see, under normal years, pre-pandemic years, 49% of Puma's energy was coming from retail petroleum sales, while 38% was coming from corporate petroleum sales. So there has been a concern about the retail client. They do make up half of their revenue. Vernon, this is you stopping at the gas station, putting fuel in your car, buying a few things here and there. This is everybody managing this. So if you want to take a look at what is Puma doing to get into the LPG space and why? And so I'm going to quickly get here and take a look at what have been the fastest growing revenue points for Puma. One of the fastest ones has obviously been B2B business services. In other words, serving corporate clients. The second one was obviously retail, which was only growing at 5.5%. Now that's a concern for them. Why is their retail, which is their biggest part, only growing at 5.5%? And that affects the growth of their revenue. Their average revenue growth has only been growing about 6.7% between 2015 and 2019. And as again, I took out the pandemic years to try and help this. So let's take a look at the retail sector, the retail demand. And if you take a look at the retail demand here, this, Vernon, is a chart of all the national vehicle growth. In other words, the vehicles of Zambia in thousands. Sorry, these are not the numbers. We just had a little bit of a glitch there. But the point is, this is the number of cars in Zambia in thousands. Okay, so we started back in 2006 with only 184,000 cars in this country. We're currently just below 900,000. We're 899,000 cars in this country. And you can see from there that somewhere between 2010 or 2009 to about 2013, we had a very fast growing auto sector. The car sector was growing. But as you can see, somewhere around 2019, obviously pandemic driven, we've seen the auto sector slow down in growth. But somewhere around 2014, 2015, we've seen the auto sector slow down in growth. And let me show you some of the growth figures of the auto sector. But and as you can see here, car growth was moving 25% back in 2007. We actually had car growth growing at 25%, 20%, and it dropped down to about 10. Obviously, that was the recession years, but we started to see it pick back up around 2012. But from 2012 to 2013, car ownership, in other words, new cars coming into the economy, has been slowing down. So if you're looking at Puma Energy revenue, the first thing you have to pay attention to is that the number of cars is going to affect the amount of money that they grow by, because every new car is going to be putting gas in there. Okay, so that means that if the car growth is slowing down, that's going to slow down their retail growth or even their business growth. Because remember, if you're selling diesel as a company, you might be selling it to industrial companies who are using it for generators or using it for other things. Those are your B2B clients. But if you're selling it to B2C, in other words, retail clients, it's people mainly putting that gas in their car, buying energy for their gensets a little bit, but really putting gas in their car. So here's the reality for a company like Puma, which used to be BP Zambia PLC, is that from 2012, they've been experiencing slow car growth. And you notice that we went from the teens of car growth, now we're down to 5 to 6% car growth. So if you look from 2016, now what happened around this period, Vernon, of 2013 to 2016, that's when the Kwacha started its slide. So if you go back, you remember that the Kwacha used to be 4-1 with the dollar. Now we're talking, it moved down, it moved all the way up to about 7-1 by 2016. And now we're talking about 10-1. So the Kwacha itself grows by double. So in other words, what does that do to car prices? Car prices have doubled during this period. So when the Kwacha loses value, the price of a car increases, and therefore the cost of a car and importing a car goes up. So that's why we've seen that this 5% growth in car prices. But simultaneously, something also happens. Interest rates, Vernon, used to be 11-12%. Okay, if you remember back in the older days, interest rates were around 11-12%, but now interest rates are now sitting as high as 30-40%. So you've gone with a car that has doubled in cost because of the exchange rate, and then the cost of financing that car has also gone up. Your interest costs on that car have also gone up, and those congruence of factors have come together, and we have now shrunk the demand for cars or the growth of cars in Zambia. So the average Zambian is importing less cars, or not less cars, they're importing cars at a slower growth rate. So they're importing the same amount of cars, they're just importing them at a slower growth rate. So that is affecting the petroleum sector. So already the base customer is growing at a slower rate. But another thing happened to Puma. In 2013, Puma was the number one petroleum supplier in the country. You know what number they're sitting at now, Vernon? 3. They've been moved off by Total, and Mount Meru has now started to shift them away. So now they're number 3. They're the number 3 petroleum provider in this country, and that's where the battle is actually coming for them. So what has happened in the same period is that the oil sector has become more competitive. Now this is a chart called the Hallerfandel the Hirschman-Hallerfandel Index. Now what this looks at is this percentage that I'm displaying to you answers the question: how competitive is the petroleum sector? Okay, that's the question. How competitive? Anything below 30% means uncompetitive. Anything above 66% means very competitive. And this, where it is, means moderately competitive. So we've gone from a poorly competitive petroleum sector in 2013 to a moderately competitive, going into highly competitive petroleum sector by 2022. So in other words, there's a lot more competition. So not only Puma is facing a slowdown in the customers that it has because cars are coming in slower, it's simultaneously also facing a slowdown in its ability to get new customers because it's competing with a lot more brands, and these guys are getting stronger. Companies like Meru have put in a lot more investment into it. Total has dominated and kept its position. So we're seeing a highly competitive sector with a slow-growing customer. So they've had to diversify. So what is the best diversification that they can do as a company? The best diversification they can do is what other products can they sell in the petroleum space? Rather than diversifying outwards, they're thinking maybe we can do a bit of product development. So you've got you whenever you're trying to expand as a business, this is sort of a business lesson. Whenever you're trying to expand as a business, you do 3 kinds of things, okay? Or you do 4. You do what's called deeper market penetration, which means you market harder in your current market. The second step is to do product development, where you create new products for your existing customers, okay? That's the next step that you want to try and do. The next step after that is called market development, where you try and find new customers for your existing products. And the final one is diversification, where you use new products to try and get into new markets. So the next step is product development, because you already have the trust of these customers. So trying to win the trust of new customers may be different. So they're saying, what is the Zambian retail customer who need more from us? What new products can we deliver to them? And they had to now start looking at what other things that have the fastest level of growth in their economy. So let me give you what's happening in terms of the 10-year growth outlook of the different petroleum products. You have petrol, diesel, and LPG next to each other. And look what it shows you right there, Vernon. Fastest growing out of them was LPG, liquefied petroleum product, liquefied petroleum gas, which is utilized in the handy gas that we actually make for people. In other words, the handy gas which people cook with from their houses. Now that we've gotten rid of these witchcraft myths that houses are going to start exploding, we're slowly getting rid of these witchcraft myths that houses are going to start exploding when you use handy gas, because if that was the case, Vernon, the majority of South Africa would be on fire right now. Okay, most people, the majority of Botswana would also be on fire, because most of those people use gas to cook as opposed to using using electricity. Okay, their stoves are gas. Especially the fact that these gas cookers have become more safe. They've actually changed, and Zambians have had to face load shedding. You've seen a 19% growth annually in terms of pre-pandemic, 2013 to 2019, a 19% annual growth in the volumes of LPG versus a 3.7% petroleum growth and only a 1.4% diesel growth. Now, obviously, if you add in the pandemic years, we're already looking at 11% LPG growth and a 6.1% diesel growth and a 5.7% petrol growth. So what was Puma Energy's best move in this? In a market where half of their customer base is retail, in a market where a large component of half of their customer base is retail, there's a slowness in terms of cars coming into the economy, because the average Zambian, one, cannot contain the price of a car. Think about it this way. Just in Kwacha, with the Kwacha moving from 5 to 20, that's a quadrupling of the price of a car. Salaries have not quadrupled in the same period. So just along that same line, we have seen a huge growth in the cost of a car. And then simultaneously, we've gone from 12% loan rates all the way up to 20-30% at some point. So on top of that, the retail customer also is borrowing at an astronomically high rate. So these two things have played to slow down the amount of cars coming in, which means the growth for Puma and their competitors are eating their market share, relegating them from 27% of the market down to 19% of the market. So therefore, they had to segue into an industry. And the best thing they could do was buy up somebody who already has supply chains, already has relationships, already has trucks, already is in existence, and therefore they can now start to enter into that market. And that, Vernon, explains the Puma Energy LPG acquisition, and that is currently being reviewed by the competition regulators. So I don't know if there are any other comments before we get into our final stretch, which is the wealth matrix. We've been talking a lot about financial planning matrix, and we've been talking about how to actually plan yourself. Now we wanted to talk about the wealth matrix, but quickly, Vernon, if there are any comments on that or any other news before we get in.
I think looking at the time, I think we should pretty much just get to the wealth matrix and, of course, dig right into it.
Okay, so let's talk about your levels of wealth. Remember, there are 5 levels of wealth. So remember, there are 8 main levels of wealth, but 3 of them are levels of poverty. So they're negative levels of wealth. We're talking about the positive levels of wealth. And the main positive levels of wealth are: 1, stability, where you are able to pay your bills. 2, strategy, where you have a significant amount of money now in the market. 3, security. 3 is security / independence. That's where you're trying to get to, where your money is now able to start taking care of your needs, and it's also able to start taking care of or in fact, even start freeing you a bit. 5 is freedom, and 6 is abundance. So there's financial freedom and abundance. And I want to talk about these levels for somebody who's between 20 and 29. Okay, so somebody in your 20s, This is what we call the structural engineering phase, where you are preparing yourself, where you are kind of getting yourself ready for what this journey should look like, and you are making sure that you're doing the right things. You're pouring the concrete into the foundation, and you need to understand that a little bit goes a long way. So here are some things you want to try and look at in this. If you're in this phase, you're mainly looking at being stable. You want to be able to pay your bills and start putting money in. So you want to go from, you want to try and get away from a pay to pay life. That is your number one struggle as a person in your 20s, going paycheck to paycheck, especially how slow the economy grows and how low wages are and how tough things are to find. So, firstly, finding a way to make money and grow your ability to make money is going to require you to start investing in yourself. The first thing you want to start looking at, Vernon, is budgeting. Make sure that you're also doing a balance sheet and not just an income statement. So it's not going to seem like much that your personal wealth statement is going to be there, but you're going to have to get into the habit of every 3 months looking at your net worth as somebody in your 20s. It'll shock you. It'll actually wake you up. And to start to look at how you need to start accumulating assets to improve yourself, and also looking at where you are as a person. You also are not, you want to try and get away from interest bearing consumer credit. Pamanthend, Vernon. You want to run away from Pamanthend. That is some dangerous behavior to start in your 20s, because trust me, it will follow you all the days of your life. Not God's goodness and mercy. Consumer credit interest will follow you all the days of your life, and it shall not be kind to you. So the things you want to try and look out for in terms of financial ratios is you want to try and look at you want to make sure that the house you're living in is less than 30% of your income, but really your target is to get it within 20% of your income. So whatever you're taking home, your housing costs should be less than 20% of that. That's the ultimate rate, but really you're trying to look at 30%. Now that's not easy. This is why you may want to question, do you want to rush yourself out there into the world where you're going to find 5,000 kwacha homes and 4,000 kwacha homes where you cannot afford it? Maybe you got a 4,000, 5,000 kwacha salary, plus you're also battling a student loan, which we put out yesterday. You also want to try and make sure that your car, the car that you have, because you're probably going to acquire your first car, you might probably in this time, and you want to keep it below your car should be less than 6 months of your income. Stick to a utility car. It's not time for AMA levels. Stick to a utility car, which you need to use at this time for moving from point A to point B. At this time, most of your friends are using BMW 2 Series or Chevrolets, as we like to call them. So you trust me, just having a car, you're the man. So stick to something that's manageable. I know one of the biggest reasons a guy in their 20s buys a fancy car when they know they're not going to be able to afford it, especially if they work in an institution which is seen to be high class, is because unfortunately, statistics have shown, and these are surveys that have been done around the world, whether it be Japan, whether it be the UK, whether it be America, women judge guys by the kind of cars they have. And a guy's life is built on trying to make sure that he can impress the right amount of women to get them to pay attention to him. Also, keep your credit payments down to less than 3% of your income. Don't try and get too many per month. Your credit interest should be lower. Don't carry credit over many things. So one, discipline is important. Spending less than you earn is important, and be careful. Be careful of going on what we call the post-university lifestyle celebration. Woo-hoo, I've made it. Time to show the people that I have the money. So that is the first level of wealth, especially to a person in their 20s, kind of the structural engineering you want to do. You want to get out of the pay-to-pay life. You want to make sure you have a balance sheet as well as an income statement. Avoid customer credit. Try and avoid the car trap. Your housing questions are going to be very tough for you, because some of you may have to consider sitting down. If you're living with your folks, some of you may have to consider sitting down with them and negotiating a way to stay there without trying to stay there for free, but without trying to take on the expensive world of living on your own. I know you're looking for that freedom to say, I want to go out as much as I want, but it's going to bankrupt you and it's going to set you back many years. So if you want to build the right foundations, you need to be. Here's what I say to most people in their 20s. Coming out of college, you're going to think a lot of yourself. You're going to think you're the king of the world or the queen of the world, and it's time to show the world that you can step up. My advice to as many of you as possible, if you have the opportunities, is really slow down. Do your math. Run your calculations. Do not, I repeat, do not try and prove anything to the world. You have nothing to prove to anyone, okay, except trying to make the best decisions. This comes from people who in their 20s squandered their 20s trying to do the exact things we're warning you about. Okay, it means nothing to you. When you get to your 30s, you're just going to be smacking yourself on the head saying, why didn't I think of, why didn't I do this? Why didn't I do this in my 20s? So this is the time to be rational and mathematical and to not be emotional. You have to combat your emotions in your 20s. I promise you, your life in your 50s, your 40s and 50s will thank you so much if you choose to be rational in your 20s and build the foundations of stability. We're going to go through the rest of these, Vernon, and journey through them until the end of next week, where we will end the 5 levels of wealth and journey for people. But with that, Vernon, close off today. I wish you a lovely day, my brother. Okay. And that's it from Behind the Markets for everyone.